In all the double dealing and backroom deals of Washington and Wall Street, there's still one way for regular investors to get the same kind of inside information. The same kind of information that saw shares of Twilio jump 40% in the months after revealing it in our December 6th video, or that saw Planet Labs shoot up 72% in less than 2 months from our video December 13th. Hey Bowtie Nation, Joseph Hogue here with an update to one of our most popular series, an inside look into the stocks the largest tech companies are buying, your opportunity to piggyback on the investments made by Nvidia, Amazon, and Alphabet. This is all from the company's 13F reports, a mandatory filing by the Securities and Exchange Commission that is the closest thing to insider information you can get without the handcuffs that go with it. I'll show you how to find those reports and how to use them for those fast double-digit returns later. But I want to get to those stocks in this video because Nvidia has just updated its investments worth over $300 million in 5 stocks. The release of that report led one stock to more than double, 159% return in a single day, and another to crash 28% when the file was made. But I'm going to show you why I'm buying the crashed stock and not the one Nvidia bought. I'm going to reveal all the changes to Nvidia's recent report, including 2 new stocks, 3 it dropped, and 3 it's still betting millions of dollars on. First up, shares of Chinese autonomous tech company WeRide, ticker WRD, jumped 159% on news that Nvidia had picked up 1.7 million shares of the company, worth about $30 million, or 0.6% ownership in the company. This is a new investment for Nvidia and came completely out of left field, but while I'll highlight a very specific strategy Nvidia is using with its other investments, I think something else is in play here with WeRide. Since its inception in 2017, WeRide has expanded operations to 30 cities across 7 countries, though still mostly operating in China. The company brands itself as a first mover in that autonomous driving market, with less expensive cars than others in the space, and reaching a level 4 autonomy, very near to that self-driving level 5 that we're trying to get to. The company also has a very interesting segment in its public utility vehicles, including a robo-sweeper. Revenue exploded from 18 million Chinese yuan in 2020 to over $500 million in 2022, which is actually still only about $72 million USD, but has since fallen to 365 million Chinese yuan, or about $50 million over the last 12 months. China has been going through a major recession, so that might explain some of this, but not what you want to see in a high-growth stock, especially that operating income that is getting progressively worse. The company has increased its spending faster than sales and reported a $254 million operating loss over the last year. Now, of course, the few analysts that are covering the stock see sales booming 189% next year to over 1 billion Chinese yuan. It's about $140 million. But the fundamentals here are god-awful, and the stock trades expensively at 34 times price to sales. But none of that probably matters to Nvidia because I think this is an olive branch to the Chinese government. Nvidia has been able to get around some of the export restrictions on semiconductors by creating an alternative to its chips, but sales in China have fallen from about 25% to 15% of its total revenue. That's still as much as $30 billion, and a segment that Nvidia desperately wants to keep alive if restrictions ever get lifted, so it would make sense that it would invest in a Chinese AI company to help nurture that ecosystem in the country. Now, with that rough state of WeRide's finances, the shares are too risky for me, but could be a good bet if relations between the US and China ever do thaw. Nebius Group, ticker NBIS, didn't get quite the same bump when Nvidia reported its new investment of almost 1.2 million shares worth $36 million. Those shares are up 114% over the last year, so may have already seen a lot of that. And while Nebius is hooked into the fastest growth themes in AI, it feels like they're trying to be everything to everyone here. Besides the core cloud platform, the company is also building data centers, developing an ed tech platform, and autonomous driving technology. Now, that scope of business is similar to what Amazon and Alphabet are doing, but then again, Alphabet has $72 billion in free cash flow that it needs to invest, versus Nebius, which reported a negative FCF of $374 million in the last fiscal year. It's kind of like Nebius is the kid that signs up for every club at school for his college applications, but then gets named most likely to suck at everything in the yearbook. So while Nebius is targeting an absolutely giant $260 billion market for cloud and GPUs, along with another $150 billion market for its other segments, I wonder if it's actually going to be competitive in any of them if it tries doing it all at once.